Hello and welcome to our aviation markets analysis. Today we're diving into how Boeing is capitalizing on Airbus's misfortune. In particular, the software fiasco that hit Airbus over the weekend, and what it means for Boeing shareholders. Over the past weekend, Airbus was forced into an unprecedented recall of its A320 family jets due to a flight control software glitch. Regulators required urgent updates after a JetBlue A320 incident revealed a vulnerability to cosmic radiation in the flight control computers. In total, about 6,000 Airbus A320 series planes, roughly half of all A320s worldwide, had to be grounded for emergency software fixes. It was the largest safety-related recall in Airbus's 55-year history, coming at the worst possible time. One of the busiest travel weekends of the year. UPI.com. Airbus scrambled to push out software patches, and by Monday morning most of those jets were updated and back in service. But the damage was done on the business side. Airbus's stock plunged on Monday, reflecting shaken investor confidence. In Paris trading, Airbus shares fell about 5.8% by the close, after dropping as much as 9 to 10% intraday, their worst one-day drop since last year. This sell-off wiped roughly $10 billion off Airbus's market value in a day. For context, Airbus's market cap slid to around $173 billion, down from about $183 billion. Airbus also disclosed an unrelated quality defect in A320 fuselage panels from a supplier, compounding the bad news. All of this created a sense that Airbus is juggling a mini-crisis, with safety fixes and manufacturing snags threatening its aggressive year-end delivery goals. UPI.com, CNBC.com, NBC.com, IV.com, Benzinga.com, now under Boeing. Boeing finds itself in an unfamiliar position, benefiting from the other guy's technical troubles. Boeing's stock on Monday weathered the turbulence far better than Airbus's. In fact, Boeing shares initially ticked up in pre-market on optimism that airlines might lean more on Boeing, though a broader market sell-off later pulled Boeing slightly negative by the close. By Monday's end, Boeing stock was down only 1.3%, a far milder drop than Airbus's plunge. In other words, Boeing dramatically outperformed its rival on a day when Airbus was sinking. For Boeing shareholders, that was a refreshing change of pace. After years of Boeing being the one mired in safety scandals, this time it was Airbus taking the reputational hit, and Boeing catching a rare tailwind. SomCapital.com. Benzinga.com. Let's break down how Boeing is benefiting in the short term. Investor sentiment and stock impact. The immediate effect was in the stock market. As news of Airbus's recall spread, many investors saw Boeing as the safer bet in the duopoly, at least for now. Boeing's relatively small dip versus Airbus's nosedive effectively boosted Boeing's standing in portfolios. Some traders likely rotated money out of Airbus and into Boeing, anticipating that Boeing could pick up the slack from any Airbus stumble. Boeing's market capitalization, about $144 billion before the news, crept up relative to Airbus's, narrowing the gap between the two companies' valuations. For Boeing shareholders, who have watched Airbus claim the top spot in global jet sales in recent years, that shift in momentum is welcome news. It signals renewed confidence that Boeing can capitalize on Airbus's slip. In fact, Boeing hasn't seen positive headlines like this in a while, so Monday felt like a turning point. Bad news was hitting Airbus, not Boeing. UPI.com. Benzinga.com. Options market activity. We also saw signs of optimism in the options market. Around the time of the Airbus crisis, unusually high call option volumes were detected for Boeing stock. In one report, analysts noted 8 large bullish call trades on Boeing versus only 3 put trades, calls totaling about $547,000 in bets versus $141,000 in puts. That's a significant tilt toward bullish bets. Such whale options trade suggests that some big investors were positioning for Boeing shares to rise, or at least outperform, in the short term. It's as if the smart money anticipated that Boeing would be a relative winner from Airbus's woes. Seeing this kind of positive bias in Boeing's options is notable. It reflects a swift sentiment swing on Wall Street in Boeing's favor. Benzinga.com, short-term sales and order opportunities. Beyond the stock price, Boeing could see a bump in business. Airlines dealing with grounded Airbus jets or delayed Airbus deliveries are more likely to turn to Boeing to fill immediate needs. For example, if an airline was expecting new A320s that now risk delay due to fixes and inspections, that airline might ask Boeing if it can accelerate delivery of any 737 MAX jets in the pipeline. Boeing delivered over 50 airplanes in October as it recovers its production capacity. That steady output now looks very attractive to carriers facing Airbus's hiccups. Boeing's reliability, after years of its own issues, is finally becoming a selling point. In essence, Airbus's misstep creates a window for Boeing to win short-term orders or swap deals. Even if actual order books don't change overnight, Boeing's sales teams suddenly have a compelling pitch. They can tell airlines, "We have planes ready, and we're stable. Let us help if Airbus can." This could translate into Boeing grabbing a few extra plane sales or leasing deals in the next few months, which would directly boost revenues. It's a scenario where Boeing becomes the unexpected fallback supplier for airlines this winter. Benzinga.com. Now, let's emphasize what this means for Boeing shareholders. In the short run, it's mostly about confidence and relative advantage. Boeing stock has underperformed for years due to the 737 MAX crisis and production setbacks, while Airbus surged ahead. Suddenly, roles reversed for a moment. Airbus was on the defensive, and Boeing looked comparatively strong. That narrative lift can be powerful. It attracts momentum investors and improves Boeing's credit of trust in the market. We saw Boeing's name in headlines framed positively, for once not connected to a failure, which buoys shareholder morale. Boeing investors essentially dodged a bullet that hit Airbus instead. If you're a Boeing shareholder, you're thinking, Airbus's pain could be our gain. In tangible terms, if Airbus's problems shave a few percentage points off Airbus's growth or market share, those points might accrue to Boeing's side of the ledger, boosting Boeing's future earnings prospects. There's also a knock-on effect. As Boeing's outlook brightens, even marginally, analysts might upgrade their forecasts, and big institutions could increase positions in Boeing stock, anticipating better cash flows in 2025. All of that potentially lifts Boeing's share price, which benefits shareholders directly. It's no surprise that analysts and financial media are now discussing the possibility of a shift in the Boeing-Airbus balance. One Benzinga report even posited that 2025 could be the year the duopoly dynamic shifts, not because Boeing suddenly soared, but because Airbus stumbled. From a shareholder perspective, that shift means Boeing might finally regain some lost ground in market value and performance relative to its European rival. Benzinga.com. What about the longer-term outlook? We won't dive too deep into the long term, so as not to get too granular, but it's worth sketching the potential trajectory. Market share and orders. If Airbus's software glitch and the newly found production quality issue cause continued delays or make airlines nervous, Boeing stands to gain future orders. Airlines plan their fleets years ahead. A carrier that was 100% loyal to Airbus might now consider splitting orders with Boeing to diversify risk. Boeing could see a boost in its order book for the 737 MAX and upcoming next-generation planes if Airbus falters on reliability. Even a small shift, say, an airline ordering 10 additional Boeing jets instead of Airbus to hedge bets, is a multi-billion-dollar win for Boeing down the road. Pricing power. When one of two duopolies hits a snag, the other often gains pricing power. Airbus has been in a position to command strong pricing recently, given high demand and Boeing's earlier problems. Now, with Airbus under pressure to appease customers, and maybe even facing liquidated damages for delivery delays, Boeing might be able to negotiate better pricing on new deals. That could improve Boeing's profit margins on aircraft sales long-term. Execution risk. Of course, whether Boeing fully capitalizes on Airbus's issues depends on Boeing's own execution. Boeing still has to ramp up production, fix any supply chain issues, and avoid mistakes. If Boeing falters, or if any legacy issues resurface, then this advantage could evaporate. But assuming Boeing stays on its current steady path, the company is positioned to benefit from any Airbus stumble for months or years to come. Airbus is racing to meet a target of 820 deliveries in 2025, and these disruptions raise the risk it might fall short. Every jet Airbus can deliver on time is an opportunity for Boeing to convince the customer to switch or at least to shine by being on schedule. Airbus's backlog is huge, but so is Boeing's. Airlines ultimately want reliable fulfillment. Boeing will aim to show that it can be the reliable partner as Airbus works through these headaches. INVZ.com. INVZ.com. Reputation and relationships. Long-term, shareholder value in aerospace is also about reputation. Airbus's quick action during this crisis. They apologized and fixed planes quickly. Won praise and might limit damage. But the incident still reminds airlines and flyers that Airbus is not infallible. Psychologically, this levels the playing field a bit after Boeing's 737 MAX saga. Boeing's brand, which was tarnished, might recover some trust as Airbus shares in the scrutiny. A stronger reputation means airlines won't hesitate to do business with Boeing, which supports long-term sales and thus shareholder returns. CNBC.com. CNBC.com. SomCapital.com. To sum up, Boeing is indeed benefiting from Airbus's troubles in the here and now. In the short term, Boeing enjoyed a relative boost. Its stock held firm while Airbus's sank. Investors placed bullish bets on Boeing in the options market, and Boeing is likely fielding calls from airlines exploring stopgap solutions that could involve Boeing jets. For Boeing shareholders, the immediate effect is a sigh of relief and a hint of vindication. Boeing is gaining at Airbus's expense, a reversal of the narrative we've seen for much of the past few years. In the long run, if Airbus's missteps continue or have lasting ripple effects, Boeing could convert this momentary advantage into a more lasting one, capturing additional market share and improving its financial performance. That said, competition between these two giants is a long game, and Airbus will surely bounce back from this incident in time. But for now, the skies are favoring Boeing, and Boeing's investors are feeling a lot more optimistic because of it. Benzinga.com. Benzinga.com. That's the story so far, an Airbus glitch turning into Boeing's gain. It's a great example of how in a duopoly, one company's headache can become the other's opportunity. Boeing's benefiting on multiple fronts, especially in market sentiment and potential short-term sales, thanks to Airbus's rough weekend. We'll keep watching how this plays out in the coming weeks as both companies navigate the aftermath. Thanks for listening to this special analysis. Now, as a bonus, let's quickly highlight several stocks that could benefit from Airbus's software issues, in addition to Boeing itself. Below is a snapshot of companies and why they're poised to gain. Show more lines, potential beneficiaries, and key data. Company, ticker, market cap $B. Why it could benefit from Airbus's issues. Boeing, BA, 143.7. UPI.com, direct competitor. Airbus's recall and delivery delays may push airlines to Boeing's 737 jets as an alternative. Benzinga.com. Investor sentiment has shifted positive toward Boeing as Airbus grapples with fixes. Benzinga.com. Spirit AeroSystems, SPR, 4.3 major Boeing supplier. Builds fuselages and parts for Boeing jets. If Boeing ramps up production or wins extra orders due to Airbus's problems, Spirit's workload and revenue should rise accordingly. General Electric, G315 jet engine maker. Through CFM International, a GE Safran joint venture, GE supplies engines for Boeing's 737s. More Boeing sales mean more engine sales for GE. Airbus's woes could divert some future narrow-body orders toward Boeing, benefiting GE's aerospace segment. Embraer, ERJ, 11.5 regional jet competitor. This Brazilian plane maker offers smaller jets, E-jets, that some airlines might consider if A320 deliveries are delayed. Embraer could see a halo effect as airlines diversify fleets. Its stock has been strong this year, plus 68% YTD, on aerospace rebound, and Airbus's hiccups could further boost its prospects. AerCap Holdings, AER, 21.9 aircraft leasing giant. If airlines face Airbus delivery delays or need temporary lift due to grounded A320s, they often turn to lessors for interim aircraft. AerCap, as the world's largest lessor, could benefit from increased leasing demand or extended leases on Boeing aircraft, while Airbus customers await fixes. Market cap figures above are approximate, based on late November/early December 2025 data. BA and SPR in USD, Airbus-related metrics for reference. Airbus's market cap, $173 after the drop. YDD equals year-to-date stock performance. UPI.com. Each of these companies has a stake in the fallout from Airbus's predicament. Boeing is the clearest winner, as we've detailed. Spirit AeroSystems rides shotgun with Boeing's fortunes. GE gains if Boeing's aircraft production climbs, since every new Boeing jet often means a GE engine or GE services contract. Embraer may pick up business at the margins, especially for airlines needing smaller jets not affected by Airbus's glitch. And AerCap and other lessors can step in to fill immediate capacity gaps for airlines, potentially at higher leasing rates, which boosts their earnings.in summary. Airbus's software glitch and fleet recall sent shockwaves through the aviation industry, and a select group of stocks, led by Boeing, are positioned to benefit from the turbulence. Boeing shareholders are seeing a short-term payoff from this development, and if you own or follow any of the companies above, keep an eye on how this situation evolves. It's a fast-moving story, and what started as one manufacturer's technical problem is now reshaping competitive and market dynamics across the aviation sector. Benzinga.com. That's all for this analysis. Thank you for tuning in to our breakdown of Boeing's opportunistic rise amid Airbus's troubles. Until next time, safe flying and happy investing.